this question of GDP growing less than 1% this year, which you mentioned recently. So it looks like, are you, I should say, set to revise down your forecast? 2021, I believe, was a 0.7% increase in GDP, 3.9% for 2022. Are you going to, at the next meeting, in fact, that's next week, consider putting out an even lower forecast?
We'll be putting out our next forecast on December 22nd with our next monetary policy report. So it would not be appropriate for me to comment on specific numbers. I can say this, that directionally, actually, we think 2021, given that the third quarter lockdown didn't have as severe an impact as we had expected, that there is probably some upside to the 0.7% figure that we initially put out for this year. Next year, the figure that we have out there right now was 3.9%. But again, there's a lot of uncertainty with Omicron and the impact on tourism. So that remains to be seen.
Well, speaking of the impact on tourism, one of your senior directors said that Thailand may not be able to meet its tourism target for this year and next. For 2022, 6 million foreign arrivals expected, 200,000 this year. How far do you think that could fall short, and what is that going to mean for the path of policy?
This year, actually, the numbers have been coming in fairly good, and we've already hit 200,000 tourists, which is a very, very low number. Because remember, before the pandemic, we were hitting 40 million tourists a year, so 200,000 is basically rounding error. But this year so far, we expect to hit 200,000 already. The issue is really on the outlook for next year. Omicron raises a lot of uncertainty, but right now, our baseline expectation and forecast is that it will not hit tourism, the forecast that we have for next year, which is 6 million, as much as we might have otherwise been worried about, given the spread of the new variant, because we had a very, very gradual recovery in tourism in our baseline forecast. So, we expect January and whatnot to be off, but given that the numbers were very, very low to begin with, the overall impact in terms of headline numbers might not be that large. If there's another variant that comes in at the end of next year during our high season, and we understand there's always that possibility and a lot of letters left in the Greek alphabet, then there will be a significant downside to our forecast for next year. But as it stands, not so much.
Well, Governor, one thing we do know is going to happen this week is the Federal Reserve is going to meet. It's expected to speed up the pace of the taper, and it may signal a speed up of rate hikes, maybe even more in the next couple of years. The dollar's been strengthening recently. If it continues to strengthen and the baht weakens, then do you have to look at steps like even eventually something towards tighter policy, raising rates?
Most of our rate trajectory will be dictated by domestic considerations, things that happen with our inflation, because we have in place a flexible inflation targeting framework. Right now, that inflation is not that much of an issue because it's still trending towards the lower end of our inflation targeting ranges is 1% to 3%. Looking at things that very importantly now about the robustness of our growth recovery, and lastly, considerations if they arise of financial stability. It will be less dictated by what happens with in terms of Fed responses and earlier than expected tapering. We're a country that is not that vulnerable to more rapid tapering by the Fed. There are a bunch of reasons for that. First off is that our external buffers are very strong. We have very high levels of reserves, low levels of external debt. But also the transmission effect from, say, a spike in bond yields from overseas to the domestic bond market and to the real economy is relatively muted. And there are a bunch of reasons for that.
Well, and of course, though, the baht is definitely something that you watch very closely, and it can have a big impact on your economy. And right now, it looks like policy changes in the U.S. and China are moving in the opposite direction. This could create, I guess, conflicting forces for the baht, and how, is that something you're watching very closely, and what could it mean for steps you take?
Yeah, obviously we have to follow these things very closely. Exchange rate is something is a variable that impacts the economy very widely. We're a very open economy, very dependent upon exports and tourism. That said, the impact of the Fed moves and by the PBOC are very different in terms of how they play out in an economy like Thailand's. The Fed moves of the Fed, given the dominant role of the dollar, have big financial market spillovers. And as I mentioned, for us, relative to perhaps other economies, that impact is perhaps a little less worrisome for the reasons that I cited. With China, it's a bit of a different story. China, the impact isn't so much on financial markets that worries us. It's the impact in terms of growth. So the spillovers that matter most from Chinese central bank actions are in terms of what happens with Chinese growth and the impact that will have on the economy globally and in Thailand. That said, the most important easing that would matter most to us from China would be easing in terms of their outbound tourists much more than easing by any easing by the PBOC.
Governor, do negative real rates impact the way you're thinking? And if so, how do they play out in terms of policy formulation?
Yeah, the one area where we had a fair bit of financial, shall we say, pockets of financial instability was in household debt going into the crisis. So the fact that real rates rates have been low and real rates have been negative for quite some time in a normal situation would have cause us to have concerns about the buildup of household debt, because that's already increased from about 80% of GDP to about 90% of GDP last hold. So that's something obviously that we're paying attention to. But again, that has to be put in terms of the overall context of the recovery, and in terms of rate decisions I mentioned will be, at this point, given our flexible inflation targeting framework, paying more attention and more closely attention to making sure that the recovery is intact, continues, that inflation remains within our range, and then looking for signs of widening or worrisome financial instability.
Right. And Governor, I guess to follow up on Rish's question, David here, by the way, I mean, who knows really where inflation is going to go, and who knows really how long your interest rates are going to remain negative. How would you describe demand for loans, given that obviously your benchmark rate is, I mean, virtually at zero, really, and to your earlier point on what you want and need to see before you move on rates, give us a sense of domestic demand.
Sure. Well, loan growth is a result of both demand and supply, right? So, but all told, I would say that we have been, I think, quite encouraged by the credit growth in the system. Our first priority heading into one of our first priorities on the monetary and credit side heading into the crisis was trying to make sure that the banking sector played its credit intermediation role and acted as a shock absorber, not a shock amplifier. And so normally when we see GDP contract, and last year we had a contraction of over 6% of GDP, and this year lackluster growth that we mentioned, we would have expected normally, right, that credit growth should have contracted. So we were quite happy that we actually saw credit growth continue to grow, to expand, and expand at a rate actually higher than we saw in neighboring countries. Credit growth in Thailand now overall system-wide is growing at about 4 or 5% year on year. So that's higher than that you see elsewhere in the region. And so that's been quite encouraging. The concern with us is that it isn't necessarily going where we would like it to go. A lot of that credit growth is concentrated in the corporate sector, in the household sector, which is why we had to put in more directed credit measures targeted towards the SME sector, trying to put in place credit guarantees to address increasing risk appetite and whatnot.
So you have said that you don't expect to get back to pre-pandemic levels in the economy until, I believe, the first quarter of 2023. When do you expect jobs to get back to pre-pandemic levels?
Yes.
And is this tied very closely to maintaining stimulus not only from the Bank of Thailand, but also on the fiscal side?
Yeah, it's a great question. First response, Kathleen, is that when we say it gets back to pre-pandemic levels, that's in terms of the headline GDP numbers in terms of levels. If you ask people, say by the first quarter of 2023, where we expect GDP to go back to that level, whether it will feel like things are back to normal, I think the short answer for most people will be no. And that again is because the income and employments will still be quite a bit a ways off from what it was pre-crisis. That picture is going to be driven largely not by the headline GDP numbers, but the employment income picture will be driven much more what happens with tourism, because tourism has such a large employment and income footprint in the economy. Tourism, both directly and indirectly, accounts for close to about a fifth of our employment. So until we get our headline tourism numbers back to roughly where they were prior to the pandemic, which is probably not anytime soon, because as I said, we're still a long way from the 40 million that we saw pre-COVID. That full employment and income figure is not likely to come back to where it was before.
So is it fair to say, you've gone through 12 meetings with unchanged policy. Is it fair to say that when you do move, you expect that to be a move to start removing stimulus, start raising rates? And what would be the key indicator of yes, it's time to look in that direction?
Yeah. No surprises. I think we have, again, a flexible inflation targeting framework in place. So the kinds of things that would be looked at will be the usual trinity of factors. Growth, inflation, and financial stability. We have again, it's not a mechanical approach. So the priorities of those three factors will adjust. Right now, I think we've been fairly clear in our embassy statements and in the monetary policy report. The priority is on ensuring that the growth trajectory is reasonably robust and that the recovery remains intact. So that's something that we'll be paying a lot of attention to. So looking at risks to the growth outlook, that will be one of the important considerations. Again, how Omicron and other the rest of the pandemic plays out. Inflation, again, something we'll be keeping a very close eye on. Like I said, right now, it isn't top of mind concern because it's still within our target range and towards the bottom end of our target range. But one thing we're looking at closely is global spillovers from the inflation pickup that we see happening across the globe. That said, again, pass-throughs in Thailand on inflation have tended to be somewhat limited. So that, again, suggests that we don't need to have a very strong knee-jerk reaction to what happens on the global inflation front and see really how it plays out domestically in the economy with what happens with local wages and local prices and whatnot. And lastly, again, to keep an open eye, close eye on any signs of financial stability. So those would be the three things that we would pay most attention to.